Hey everybody, hey traders, Chris Pulver here. It is Sunday evening, doing a weekly outlook video. I'm going to post on the YouTube channel as well as post in Telegram for my trading rooms. Let's take a look at the markets this week, look at the economic news, look at our major indexes and currencies, baskets, things like that, and let's get a game plan together. So this week's trading will be the last week of trading with no holiday disruption, Monday through Friday. So we have the 18th to the 22nd. We have Christmas Day the 25th. We'll still have trading from the 26th to 29th. But be sure to check with your brokers to make sure that there's normal trading hours. There might be limited trading hours. Forex should be open the 24th through the 29th, but most likely there's going to be some broker outages or just some limited broker hours and trading hours during Christmas Day as well as New Year's Day. So like I said, I'm traveling this week. I'll be returning to the office on Wednesday the 20th to finish out the remainder of the week. And I do have some expirations on my stocks and options account on the 22nd, 29th, and the 5th. I also sprinkle in a couple on the 26th and the 27th. So I'll talk about that once I get back into the Equities on Demand classroom on the 20th. But let's dive right in. So first, let's take a look at the calendar. So for this coming week, major news that I'm looking at here, we have the Bank of Japan. Their rate decision just came out. Actually, no, it's coming out Monday night. My fault. So we have forecast. Keep it the same. Bank of Japan, negative 0.1%. Just be careful on the yen crosses. We cleared a lot of pips last week in the flex trading room between the dollar yen, New Zealand yen. I say stick with your alignments, trade 1 hour or less. If you like the 1 hour time frame, 4 hour time frame, 15-minute time frame, I think there's good scalping opportunities, good volatility on the Japanese yen, but just trade what you see and stick with the alignments because they can be certainly tricky. High impact news for Tuesday the 19th. We have CPI news coming out of Canada. They're forecasted to be at 3.3. This is looking at the year over year. Previous print was 3.5, 3.6, looking to forecast 3.3, so trending in the right direction for lower inflation numbers. Great British Pound, we have inflation expectations or CPI news on Wednesday. 4.6 was previous, forecasted 4.3. We'll see if that's also a beat with lower inflation levels. Consumer confidence for the U.S. There's two of them actually. We have the CB as well as the University of Michigan Consumer Sentiment Report. So consumer confidence sentiment as well as the core PCE price index for the U.S. that's coming out this week. Final GDP numbers for the quarter out of the U.S. on Thursday and unemployment claims. Retail sales out of the U.K., GDP for CAD, and then, like I said here, the PCE and U of M Consumer Sentiment Report on Friday. So I would say this. Let's take a look at the charts. The SPX is just a little bit off these previous highs. This is all-time highs going back to early 2022. I would expect to see, and I mean, obviously anything can happen, but I would expect to see that we just had the NASDAQ actually hit the all-time highs on Friday. The DIA or the Dow Jones also hit all-time highs last week on Thursday and Friday. The S&P 500 has yet to eclipse the highs. So you can see that it's close within a couple of percent, and we'll see if the SPY perhaps or the S&P 500 can grab these highs as well. That'll give the market something to celebrate because it's been in about a 2-year drawdown. If we get to the end of the year and we can break these highs, that's a good sign. I'll also be looking to protect some profit on my debit spreads that I have going long on all of these major indexes. So the SPY right here, chart alarms are set, as you can see. I'm looking to see if those chart alarms go off, and I'll protect those profits on my call side. On the QQQ, if we eclipse these highs, so this is what I want to point out. Look at the NASDAQ. The NASDAQ broke the highs, and you can see that we just tagged those all-time highs on the actual NASDAQ. Okay, you go to the QQQ, we're just shy of that. So it's going to be close. We'll see if there's a drift and melt up to the upside. Maybe path least resistance still pushes higher with this week's trading, and maybe with enough volume to just kind of drift for the rest of the week. We could see a slowdown as well. Maybe it taps the highs and then comes back in and finds some efficiencies in this FOMC candle from last week. We will find out, but I think the melt up is the real deal. DIA broke these highs. The DIA has been outperforming pretty nicely. Expirations that I have out here, I've got a 358 put for protection, which most likely is going to be a loss. But I also have a debit spread, the 363 by 373, and this one actually might get filled for full profit. I did a $10 credit on this one. I think I paid like $2 or $3 for this debit spread. If I can close it out for $10 credit, walk away with $6 or $7 net, that'd be awesome. I'm also in the IWM. This one was a strangle that I closed out for profit. We had this big run. We've been in this the entire time. We were in this in the low 160s, and we ended up exiting last week with a strangle going up to this 198, 199 handle. So it worked out pretty nicely. I'm no longer in the IWM. for the next couple of weeks. But this has been a really good rip to the upside, about 23% if I'm not mistaken. So 20% and change. There's about 22.5 to 23% straight up to those range levels. So good technicals on the IWM. You know, if we looked at this to break higher, let's say we break above 200 and firmly break on the daily or weekly, you know, is this able to melt up and have a bigger catch up where small cap leads the way? Maybe. Part of me thinks not so much though. I think that we, you know, had a nice run here. We take a little stall, take a little breather, and possibly go a little bit more sideways or at least pause. If this thing goes all the way up to all-time highs, that would be quite the rip. And if it does that, great, because I hope the other broader markets go with it. And so we'll see what the melt up looks like for the rest of the year. It's only 2 more weeks of trading. So 1 full week, and then disrupted by Christmas Day, and then the 26th to the 29th to finish off the year. And then we have New Year's, and then a new week in January. I'm looking for trading to kind of return to business as usual for me on the 8th through the 12th, or the 15th and onwards, and then just looking forward to a grind for the year of 2024. So I hope all you're ready to trade with me in the trading rooms and jump onto the YouTube channel. So we're going to be busy. Looking forward to growing the community and trading with each and every one of you. When it comes to Forex, let's talk Flex Trading Room and Forex for a moment. I'll spot check some of our prices and positions. We're not in a ton, but we are in some Swiss crosses, my portfolio builder class as well. So Swiss pairs, I'm still looking to see if the Swiss get some love to the upside. If the Aussie Swiss starts breaking higher, I'll be stacking orders here. I think that the CAD Swiss has made a really good recovery, and I think there's more to the upside. CAD Swiss, same type of thing, looking to get long. I'd like to see this clear 6,600 and then trade this at a minimum back to 68. But my big levels I'm using in my portfolio builder class, getting all the way back to 71.50 and 72.50. So I'm really looking for just a bullish pattern to emerge. If we break this high, pull back at all, I'm going to be adding on swing trades. If we break and just stack up some buy stop orders, my target is 71.50 to 72.50. Obviously, coming all the way back to these highs at 78 would be fantastic, and I'll just follow that in some wave structure. The Euro Swiss is respecting the recent lows. So here we are, at least holding these same levels. If this is a double bottom, we come all the way back to this high at 1.01. We break above that. We measure this move. It's about 500 to 600 pips. We go 500 to 600 pips above that. We get up here towards 106 or 107. So could be a great trade. I certainly need to see this level hold around this 94 handle. And hopefully this chart alarm is going to be the sign for me to start getting back in at 97, 97.50, 9800, stacking some orders early, and then get back up to at least 101. We go to Pound Swiss. Pound Swiss, a lot of consolidation. I've got some stacked buy orders up around 12.50 and higher. Let's go New Zealand Swiss. Actually, New Zealand CAD I'm in, and I'm holding long in New Zealand CAD. Really nice trend line break in here. Let me draw this out. So a nice trend line break in this area, and I'm looking to add on dips and pullbacks and trying to take this all the way back up towards 8,800. If we go to New Zealand Swiss, this one I'm long, looking to see if we can get above 5,500 with some conviction. You know, 5,550 to 5,600. Target these previous highs at 6,000. That's a nice round number as well. There's a big pocket back here around 62. And longer term, if I'm willing to hold it, measure out some 3 to 5 wave moves, possibly all the way back to 67. Dollar Swiss, just waiting for a trend line break, looking for a bullish pattern. If we have a double bottom, great. If we come back and break this trend line sooner than later, Dollar Swiss heads back up at least to probably 94. If we get a 5th wave move, I'm looking to eat up this big inefficiency candle as low as 95.50. But upwards as high as like 98.50. So it's a big profit window up there on the Dollar Swiss with some positive swaps, looking to see if that will hold. Another trade I'm interested in, we talked about this a little bit last week in the Flex Trading Room. If the dollar CAD can work its way back down to 1.31 or 1.30, I'm going to be a buyer on the dollar CAD, taking it back up to range highs. Let's take a look at oil. USOIL recently hit these equal lows. I have these chart alarms set and these levels right around $64 and $65. So if we can break on the right side of this trend line, or maybe get a nice little bullish pattern over here, I will be long oil. I'm expecting a range trade. I've talked about this a lot in the trading rooms. You know, big ridiculous move down during COVID where we went to negative, 30 to 40 cents in the futures market, all the way back up here to a, Russia, Ukraine, oil, nationalism, supply issues, blah, blah, blah. You know it, 130, where everyone's talking about oil going to $200. And then here we have literally conflict in the Middle East, and price has been dropping on slower demand and slower growth. So to me, I feel like this area is supply and demand. So between $65, $95, I like oil ranging. My best trade would be if I can get some confirmation to buy low, take it back up towards 85 to 90 bucks. we get resistance here, take it back down to 70 or 65, and just repeat that for maybe the first 3, 4, 5, 6 months of the year. But just look to trade accordingly, have a tight stop loss if we bounce off these lows, and take it up for a nice little 30 to 40% gain. I do like that quite a bit. Let's go gold and silver. Gold is big rejection at that 2070 level. I think gold is due for a drop to the downside. We do have to watch the dollar really closely. So I switch gears here to the dollar. You know, US dollar index has room to drop a little bit further. I would like to see if the dollar can hit 101 or 100 before I start looking for major support. If we're going to see an additional melt up in the stock market, I still think that the dollar takes a hit and drops a little bit lower on some weakness in order to get those fueled rallies in the stock market for the U.S. So I'm still watching the dollar for that exact reason. Silver, I still like bullish. And actually, silver to me is more bullish as far as structure and technicals. I think silver has more potential than what I see on gold. That's just my opinion. If we have a tighter range, there's levels around $22. If we break these highs at $26.50, I would really love to see silver get back up to $30. If this swing from low to high ends up getting a breakout, that symmetry is projected up around $35. If we have that wave 1, 2, 3, pull back to previous resistance becoming support, that's around $30. And then a push up into the 40s, probably 45. So longer term, let's say the next 1 to 2 to 3 years, I could see silver getting a nice little rally up towards $35 to $45, and I want to be long. The way that I trade silver, if you're a Forex trader that's non-US, you can trade this instrument here, XAGUSD. I trade SLV in my stocks and options portfolio, which is tightly correlated to this chart. So that touches on a lot of the crosses I'm looking at for the Swiss pairs. We had a lot of profit on the dollar crosses the last maybe 3-4 weeks. We've scaled out on a lot of those profits. I'm not sitting in any dollar positions right now outside of dollar Swiss. We scalped the dollar yen last week for a nice little chunk, 675 pips and 125 pips and another 400 some pips on the dollar yen. New Zealand yen we took a little stab at, made 100 pips on that as well. I'm really just focusing on Swiss crosses with some positive swap. I'll watch the dollar basket closely. One trade I'm liking right now, and this is probably going to be something I take over into the new year. I don't have a position on currently, but I'm looking for the Aussie New Zealand to either break 106.00 and go down to the lows around 1.00, or break above 109 or 110 and go up towards 114. So it's really just a wedge play. We break above, I go long. We break below, I go south, and look to take a nice clean technical trade on the Aussie New Zealand. Other than that, I'd say stick with your alignments on the Aussie or the yen crosses. Be careful on those. There's high volatility. Plus, we have the BOJ this week on Monday night. Swiss pairs. I'm still in the Swiss pairs with the basket I discussed. The dollar cross, the DXY, the US dollar. Watching that closely. Now let's talk stocks and options for a moment. I'm going to be watching the SPY. I'm going to be watching the DIA, the IWM, the QQQ this week. Chart alarms are set. Like I said, I'll be passive in monitoring and watching. Chart alarms will go off. If I ever jumped on my phone to trade the next couple of days, I will. But I'll be back in the office full-time Wednesday. And hopefully we just have some profits to take. I've got limit orders set in my broker platforms already. So if I can close out a couple of debit spreads on the SPY and the Qs and the DIA, that'd be excellent profits for the week. And should be pretty straightforward. So I think that's about it. I mean, I'm watching. I did my outlook. I'm gonna add a video when I get back into town. So we're trading at 149.97 on Amazon. That was a close on Friday. I did roll Amazon out to February. I was able to get. I think I collected $1.97 on a covered call, and I ended up closing it out for like a 25-cent debit. Just to take most of the profit. I want to make sure I didn't get the stock all the way at 150. So I went out to February 16th. And I've got the 170 call. I'll continue to roll Amazon, but my goal is for the shares that I have, I'm trying to let Amazon get all the way back up to 190, see if there's additional like Q1 love. Maybe it's a strong Q4 for a lot of stocks. I mean, if there's holiday spending, it could be strength in the retail sector. Sentiment seems to be pretty high right now, so we could be rolling into this nice little melt up from Q4, carry that into Q1, maybe have a nice little burst to go right into the first part of 2024. And then we'll see if things kind of pause and stall, and we'll see what happens. But it's an election year. We talked about this a lot in an event we did at Market Traders this week. 83% of the time, the U.S. markets have been up during an election year. Not just up, but to the average around 11%. So, the only time it hasn't been up has been when we had, 2008's financial crisis or 2000's dot-com bubble. Or the 2000 dot-com bubble was the market was dropping. So obviously anything can happen, but when the market 83% of the time is up and it's able to ignore a lot of the noise, I mean, look what we did this year. We had 10 stocks lead the way, and then we had 2 broad market pushes from May and November that have carried the markets back near and possibly 2 all-time highs. So the market does whatever it needs to do, and we just have to be on board with it. So I still think, protect your downside where you can if you own stocks or you're, taking long positions, like have something hedged, have something appropriate. But I mean, right now, I think that we're in a good space for the next maybe, 1 to 3 months, where if the market's anticipating the Fed is going to start cutting rates, then the market's going to continue to run, and there's more money coming back in, and the bond situation is changing. The money market instruments for 2024 is changing. Everyone's anticipating rate cuts, and so if that's the case, you're going to see some refinancing in real estate. You're going to see more consumer optimism and sentiment. It could be more spending. Who knows? So all these things, I think, at least fuel a bit more of a rally to the upside, at least a melt up to continue. All right. So I think that'll about do it. Where am I at for time on the video today? We're sitting around 15 minutes. I think that's about fine. So I will let all of you go. If you're watching on YouTube, great. Thanks for tuning in. Make sure you like and subscribe to the videos. If you're watching in the Telegram links for the Flex Trading Room, Equities on Demand, Delta Trader, cool. Hope this helps. We do have some trades running to the end of the year. I'm not looking to get crazy aggressive with a bunch of new trades, but I'm going to see what the expirations give us from the 22nd, 26th, and 7th, and the 29th, and the 5th. So we do have some option trades going in, and then of course, once we kick off into Q1, it's a new year. It's a clean slate. So hope everyone had a great 2023. Certainly looking forward to a fantastic 2024. A lot to be excited about, a lot to be optimistic about, and trader's going to trade, So, all right, you know how to get a hold of me, youtube.com/ChrisPulver. You can join the trading rooms, join me on YouTube. Just here to help traders. So I'll let you go. Happy trading, lots of profits, and I'll see you soon. Thanks, bye.